Hey, future millionaires. If you have been struggling with emotional trading, fear, greed, or over trading, this lesson is for you. Today, we are diving into trading psychology, the secret weapon of consistently profitable traders. Most people think trading is all about strategy, but in reality, 90% of success comes from your mindset. If you have not watched our previous lessons on technical analysis, make sure to check them out in the playlist linked below. Now, let us dive into the lesson after the intro and disclaimer. Why trading psychology matters. Did you know that? The difference between an amateur trader and a professional trader is not their strategy, it is their mindset. In trading, it is not about how much you make, it is about how much you don't lose. For Tudor Jones. Your ability to control emotions determines your success. Even with the best strategy, without discipline and patience and emotional control, you will fail. Trading psychology helps you control fear and greed, avoid revenge trading, stay disciplined even after losses, follow a trading plan without emotions. Have you ever taken a trade out without fear or greed? Comment below with yes or no. Let's be honest here. You can see how fear and greed is actually happening. Once it is in a reply mode, you can see just if I am taking any trade here, after this one, if any breakout happen, if we'll take the trade, what is happening? We will put in a target. Then okay, just it's an example only, reply mode, okay, but it will actually happening in the market. Okay, we take a trade accordingly. It exists. It's a breakout. Any strategy or anything, okay. I'm not telling about any strategy or anything. This is only for the mindset, okay. Just we are putting here. Then we will put 1:2 or 1:3. Whatever it is, our accordingly strategy we will put 1:2. What will happen? Trade will come. Okay, we are in the trade. So what will happen? We'll see. It's going into the profit. Once we are getting this profit, there is a two or three system is. One is if you are getting 1:1, getting for the break even, some traders will do like that. Whatever the system you have to follow, okay? But don't fear or don't lose also. See that one is our target, okay? Hold until the target, put the stop loss and hold the until the target. Don't think that if price come here and going about hitting your stop loss, it's okay. But every time it will not happen. But if you are changing in between, then almost all will be coming for the stop loss. So example, just like this is only sample. You can our profit is here. It went until here 1:1 and it coming back to our entry area. This time what we have to do, we have to be patient until where it is coming. Okay. What is our rule? If you put the stop loss and the profit, just wait for it. And if you are a mechanical rule is there otherwise, okay, if 1:1 is reaching, you can put your stop loss to break even. I don't know which kind of trader you are, but you have to be so follow the rule. Then only your mindset will be okay. If you are keep changing, one time you are taking and one time you will be moved stop loss here, and otherwise you are not moving. So it's not a good thing. So how your mindset should be? Your mindset should be once you put the trade, even now you can see this one is money showing, okay. So what will happen if the money involved, our money going like this? But just wait for the target, patiently waiting, target will hitting or no, yeah, target hitting. So you are thinking, okay, if you are a 1:1, if you are from here reach, and if you this also didn't come to the break even. Once you are with fear, you are closing your trade here. Once you are seeing one or two candle, what will happen? Your profit is going. But if you are strict on the 1:2, of course it will be there. The five biggest psychological mistake in trading. You will have one challenge. Identify which of these mistakes you have made and comment below with your trading personality. Are you patient trader or the over trader, whether the emotional trader or the revenge trader? Please comment below. What are the 5 biggest psychological mistake we will discuss? One is fear of losing money. Many traders are afraid of placing trade because they fear losing their capital. What they think, okay, if I place the here trade, if it is lost, it will reduce his capital. This fear can cause hesitation, leading to missed opportunities or entering trades too late. If you have a proper setup, no hesitate to enter the trade. For that, you have need to have a proper setup, back tested setup. Then once your setup coming, just enter the trade, put stop loss and take profit. No need to fear losing money because it's an investment. You have to treat it as a business. Successful traders accept that losses are part of the process. Instead of fearing losses, focus on risk management to ensure each loss is controlled and does not wipe out your account. What the traders are doing, they will, before entering any trade, they will calculate their risk. Okay, this is my risk for this trade. And if I lose, okay, this much only will go and it is only 1 or 2 percentage of my capital. It will never wipe out my capital. Okay. There is normally the rule is like that if you have 30,000 real or $30,000, what is your risk? It should be your capital will not be wiped out if you lose 30 continuous traders. That means your risk will be $1,000. Okay. If you do like that, never your capital will not wipe. How the new traders losing their money? If you have 30,000, they are risking one trade 15,000. So if two losses coming consecutively, then their capital will be wiped out. Next one is over trading. The desire to trade too often leads to disaster. Jesse Livermore quote. What is over trading? Over trading happens when traders take too many trades out of boredom or greed. They believe the more they trade, the more they will earn. In reality, quality matters more than quantity. What they will do over trading? Okay, will win one trade. Okay, they got $1,000. Next one also we will do. Maybe get another one also 2,000. Then finally they will do trade. Then what they gain also will be losing. But what we have to do, saying here, quality matter more than quantity. You have to be proper checklist for entering trade. Okay, this is if your all the check are done. Okay, no hesitate to trade. Enter the trade. Okay, rather than overtrade means okay we'll trade from here randomly here and there. That is not good deal. The third is fear of missing out. It's known as a FOMO. Traders see price moving fast and feel the urge to jump in, fearing they will miss out in huge move. This lead to impulsive decision and entering traders without proper analysis. Always remember, the market will always provide another opportunity. Trade with patience and discipline. What will you see? You will see one breakout, then price is going higher. But if your strategy is coming retest here only to sometimes you will miss the trade. But never chase the price. Price, of course, it will come back to your entry area. If you chase from here, you are getting loss also. So market will not go anywhere. Just be patient, stick to your rules, and do the trade. Next mistake is not sticking to a trading plan. Of course, everyone should have a trading plan. When traders abandon their strategy, they become reactive to the market instead of following a structured approach. Consistency is execution is the key of to the profitability. You have to develop a well-defined trading plan and follow it strictly, no matter what happens. For this one, what we have to do, we have to make a trading plan. Which time frame you will use, and what is your strategy, what is your entry model, what is your criteria model, entry criteria, exit criteria, what is your risk reward, everything you have to be make a checklist. Then tick one and everything is okay. You have to end the trade. What is the another mistake? It's emotional attachment to trades. The stock market is designed to transfer money from active to the passive. The famous investor Warren Buffett said like that. What does it mean? Means who is active over trading, who is giving money to the patient trader, who is patiently waiting to their turn. and for the entry they are waiting for their desired level. But over traders and all these mistake traders, fear of losing, over trading, fear of missing out, everyone what they will not stick on their role, they will chase the price. Many traders hold on to losing trade for too long. That means hope. The trader will have hope. Instead of hope losing, what we have to cut our loss. What will happen if you are getting the going the price your direction, you will have the profit, okay, but what will have that profit side, we will have the fear. But actually how it should be, when losing money we have to be fear, and when price coming your way you have to hold to maximum profit, okay. The emotional attachment often leads to bigger losses. Instead of set predefined losses levels and treat trading as a numbers game, not an emotional roller coaster. What will you do? You will put stop loss. Already you decided $100 stop loss. When coming price to near to your stop loss, you will put down again. Means it will 150. Like that, your hope will hold and you will think, okay, price will bounce from here. But don't do that one. Okay. It will be losing your all the capital. There should be a strict stop loss predefined. That's why telling predefined. What is your risk? Accordingly, your quantity also will be there. Okay. Don't take, okay. Sometimes your stop loss is 10 and like what are the quantity you are taking, that to have to be different. If it is stop loss value is 15 points or 150 pips. So your quantity also you have to reduce accordingly. Which of these mistake have you made? Let me know in the comment. Of course, all new traders are making all this mistake. From their experience only, they are becoming to the pro level trade or the profitable trader. How to overcome those mistakes? Accept that losses are normal. Even professional traders lose. The difference is they cut losses quickly and move on. Accept your loss, predefine losses, then move on. Okay. Just wait for the next better setup. Accept losses as a cost of doing business in trading. Always I am saying it's as a business. Treat it as a business. Okay. So you will have investment in the business also. Same here. The losses are the investment. Stop over trading. Quality over quantity. Of course, if you are trading, you have to strict rule. Okay. This much hours I will do. Okay. From morning 2 hour or 3 hour. Or in between, if my entry criteria comes, or okay, day trader from morning to evening, I will have the three trades. You have to be three or five, whatever it is, according to your risk manager. Put a strict like if I lose first two trades, okay, I will watch the market only. I will not take trade anymore. That will be an ability, next ability, because if you are losing that two trade, and after that, someone will say close the uh, PC or mobile or anything, you just went away from. But if you find an ability to build like this, build an ability to do like this, after your okay two trades hit, that day your trade is finished. Then watch the market. Then if you can find the setup, don't take the trade, just draw and steady only. Like that, you have to control your over trading. What you have to do, one example, if you are in the system already lost two trades and your maximum trade per day is two, and you lost that one, just you know, if you have any tendency to take next trade, what you have to do, just say yourself, you are done for today, you are done for today, you are done for today, like that. You just make something to you develop to avoid the over trading. What is that? Next one is control FOMO. The market always gives new opportunity. Market will be there, market is tomorrow, and it will not go anywhere. If you miss one opportunity, don't worry, next opportunity is coming for you. But don't chase the market. You thinking that okay, if I take here I would make this much money. No, don't think like that. Your setup is okay, you enter, no, then price didn't come your end area, that also no problem. Wait for the next setup. If you are getting another one, it will not also getting missing is okay, but never chase the price. Where is your entry area, price should come there. Always put in the limit order your entry area and wait for the price to come there. And what you have to do, you have to stick on your trading plan and trust the process. Of course, you have to develop a trading plan and you have to stick on it. A trading plan eliminates emotional decision making. If you have trading plan, it will of course eliminate the emotional decision. You have to define entry, exit, stop loss, and risk management. When you are entering a trade, you know where I have to enter, where I have to exit, where is my stop loss, and what is my risk management. Everything you should know before enter a trade. Detach emotionally. Trade based on logic, not feelings. Okay. You are seeing that if anything, okay, your hope or emotion, you are thinking that okay, price will go because you already bought that one. But in chart, in the logic, you are seeing that already price reversed to downtrend and you are holding by, already given the change of character, break of structure, all these logic things are giving, but still you are thinking your hope because you already buy the market bought, you are in the buy side. Then your hope thinking that okay, market will go up, market, then what will happen, your loss is increasing, you are holding the trade with your hope. Never do that one. Detach emotionally. Doing this all the things you can overcome this mistake. These mistakes everyone will make, new trader, but from the experience then only it will be to overcome these mistakes. So what you have to do for this one, you have to invest time for the trading. Not one day coming to the market and next day you cannot make the money. You have to invest time to study and how market is watching and how market working. Then what you have to do, you have to do the paper trading, or even with small capital you have to start and you have to understand how it is working. Then accordingly only your emotions also will be suited with the trading. Otherwise, everyone can come to the market and they can make no. Even saying that 5% or 10% persons are making money in the market, 90% is losing. Why they are losing? They will have all this kind of emotions and they are doing the mistakes. Why I am here teaching here? The new trader don't want to do the mistakes again. So slowly and with detailed explanation, I am teaching here these things. Ultimate traders mindset routine. Your mindset should be like this. Develop a trading plan and stick to it. A trading plan eliminates emotional decision making. Define entry, exit, stop loss, and risk management before entering a trade and follow the plan consistently. Focus on process, not profits. The goal is not win every trade, but to follow structured process. Trading is a process, not only like making money or like losing money. No, it's a process, and you have to be strict on your trading plan. And consistent approach leads to consistent result over time. It's not like overtime making money, overnight making money. It's okay. You have to be strict on your rules, and then you have to think about this long term. Okay, if you're consistent on your approach and your process, if you do one same process inconsistently, of course you will become a profitable trader. Power up your mind with meditation and visualization. Elite athletics use visualization technique before a big game. So why shouldn't traders? Before your trading session, visualize yourself executing flawless trades without emotions. How meditation and visualization help traders? Reduce impulsive decisions, enhance patience and emotional control, improves focus and clarity during trading session. Of course, this meditation will help you. Have you ever tried visualization? Comment yes if you do it, or no if you want to start. Of course, the trader mindset should be like this. And one more thing you have to do, use screen time to avoid emotional trading. Once you enter the trade, there is a profit and stop loss. You just put alert both area. And in between, no need to look that. Just put alert, okay? Otherwise, what will happen when going price up and going down, your emotion also working together. So the idea is better when you enter one trade, just put the profit one alert and stop loss one alert. Any of alert came, you have to come and check if it is profit. Okay, how it work? You have to check. Is it okay? What was my entry? Everything was okay. Like if it is stop loss, you have to study what was wrong. His entry was correct, or you did you any two mistake. Then make a journal. You have to be journal it. You have to write down what is your mistake. In next time you don't want to do the mistake. If everything proper setup, everything was okay, then it's stop loss. No problem. It's a part of game and consider it as a your investment in the business. Mindset of successful traders. Think like a business owner. Trading is not a gambling. Trading is a business, not a gamble. Treat it like one. You have to be consider it as a business. Stay in the game. Survive first, and profits will follow. Bruce Kovner. Protect your capital and focus on longevity. You have to protect your capital. Don't wipe out the capital and look for long term. Okay. Strict on rules. One day, what you have to do today. Before entering trade, you have to think about how many trades I will take. What is my risk today? If you finish that one, just stop the trading. Be patient. Let the mark come to you. Great traders wait for the perfect setup, no trade. Focus on one strategy and master it. Jumping between strategies failure. Master one, then expand. What is new traders will do? Today we'll do one strategy. They will master study about it, and if you get it 2 3 lose one trade, then jumping to another one. But if you stick to the strategy that day, maybe that will be the profit. So you have to strict on one strategy, backtest that strategy. If you are confident after the backtest, just strict on it. Okay. Then follow your risk management and risk reward ratio. Then follow the entry exit criteria. Of course, you will be in the profitable. Surround yourself with the right people. Join communist or disciplined traders. Avoid hype groups that promote reckless trading. That one, some groups, some persons are telling that okay, this day you can make this much money, this one overnight you can be rich. No, trading is not like a gambling. Okay, you have to be strict on the all the procedure process, and slowly you can become money. There is no rule or anything like that. Okay, stock market you will lose money, but if you follow the rules you cannot. Okay, so who is doing practical and practical teaching, just join with them, not the reckless trading people. Okay, summary of this lesson. Let us recap what we learned today. Trading psychology is more important than strategy. Control fear, greed, and emotional decisions. Stick to a trading plan and risk management. Meditation and visualization improve trading mindset. Think like a business owner, not a gambler. Next lesson, we will dive into introduction to ICT concept, how institutional trading affects gold. Don't miss it. If you found this lesson valuable, like, subscribe, and turn on notifications. Subscribe, turn on notifications. Like, subscribe, turn on notifications. Thank you.